Let's bring in Alan Nuttman, Chief Market Strategist at BullseyeOption.com. All right, we started off the show. Michael Purvis was in Spain. Alan Nuttman is on the lake. So why are you trading energy bullish Enbridge Canadian pipelines when you've got a beautiful backdrop there? You're going to pollute it, Alan Nuttman?
There's still money to be made. I trade what I see. Now, we do have to talk about the person not to be mentioned that's talking about headwinds.
Did you hear my impression of you, Alan? I hope you liked it.
All right. I saw that. I got three numbers for you. First, the S&P is 25% off the low. All right. We are 5% off of the July high. So it's a pullback after a big run. And we are less than 10% off the all-time forever top. So, this little profit-taking pause that we've seen here is to be expected.
Okay. Now, the trade, though, is in Canadian pipelines, Alan, because I feel like with the optimism, you'd be bringing me a big NVIDIA bull trade. How come you're not going long NVIDIA on its sunshine week of debut earnings part 2?
It's risk reward, my friend. Now, Canada's right there, eh? Now, you got to remember, if you look right over there, you can see an ore dock. Now, what did we do about 3 weeks ago, about a month ago? We did U.S. Steel. Yeah. Cleveland-Cliffs puts U.S. Steel in play. We saw it in the charts. I don't know anybody at U.S. Steel. How would I know? But we saw it in the charts. We got a more than 100% gain. So I trade what I see. And what I see here is a stock that's down 10% in the last year trade. But it's been trading sideways, and it's also had this bullish divergence bottom, meaning that it made new lows just here recently, but the volatility is nowhere near making new highs. The volatility is below 20, and so I see that this stock is set up for a bullish divergence bounce off this bottom, trading between, let's just say, 35 and 40 for all of 2023, essentially.
All right. You're scooping in at low lows here. Alan, you're buying in the dirt.
In the dirt. Now, again, it's down 10% on the year, whereas crude oil is, a little bit positive. So their energy stocks are a little bit positive. It's a cheap stock in relative terms because of this sector, looking for that to bounce back as well. And it's been trading between 35 and 45 for the year. So 40 is the midpoint magnet. And then if it can pop to that, then it's going to move to the range top. Now, looking at, this stock, it hasn't been down to 30 since the COVID low. So I'm looking at a 30 call for January because that volatility is low. Guess what? We can buy more time. So January 30 calls trading for about 6 right now. It's $5 in the money. It's got an 80 delta. It's going to have a nice payoff. We got plenty of time. So we've got a lot of positives here as far as probability goes. And a modest move just up to that 40 level. This option almost gains 100%.
A support line to emerge on the chart at like $34 and you're good to go. I get the trade. I think it's a good observation too that it's going the opposite direction as crude oil. So, that's got to be worth something. So you trade what you see, but not boats today. We'll take it anyway though, Alan. Always a good conversation. Enjoy the weather out there, sir.
I'm sorry to Bill Belichick you with the sweatshirt today, but it's cold in the heart.
That's okay. Better attitude than Mr. Belichick.
It'll warm up.
I appreciate that. Alan Nuttman, Chief Market Strategist at BullseyeOptions.com. All right, we got people Skyping in from all over the world today. When we come back, T. Rowe Price and Sebastian Page will join us to talk about how things have changed.